Hello guys, this is Oba FX and welcome once again to my YouTube channel. So tonight I'm going to be sharing something I believe is very important and would help our trading if we take it into account and into practice, and that's how to trade the M structural patterns. As we all know, the market has three major ways or three directions in which it moves. And first is usually the downward or bearish direction. We have the bullish or upward direction. And of course, we have cases where the market ranges, meaning it moves between two horizontal distances. And we call that a consolidating or ranging market. Now, bearing this in mind, the movement of the market, as I always say, is usually never in a straight line. In other words, the bearish movement usually prints a series of lower lows and lower highs, while the bullish movement prints a series of higher highs and higher lows, whereas the consolidating market just moves in a horizontal direction. Therefore, in the process of these movements, when it comes to the bearish movement, the market forms M structural patterns. So therefore, if we are to answer the question, what are M patterns? M patterns, I would say they are bearish patterns. They are bearish reversal or continuation patterns. I say this because they are mainly prevalent in a bearish or downward moving market. So therefore, the best places to find M patterns are usually when the market has gone up for a very long time and is about to reverse to the downward side, or when it is already in a downward trend and continuing in that downward trend. So we're likely to find a lot of M patterns. So like I said, I'm going to be showing us how to trade these M patterns. The best way, the rules, because there are rules to trading a lot of structural patterns in the market. So what are the rules to trading these patterns? We're going to be looking at it. And there are different types of M patterns. So first of all, the most popular of these M patterns is our popular double top. So when price goes up, comes down, comes back to the same price level, and then comes down. Now I've talked about this a lot, the double top pattern, how to trade it. Now this is the primary M pattern. And of course, as we all know, double top is a strong bearish reversal pattern. Then there's another formation of M pattern that has a higher high. In other words, we have the first touch, we have the second, then the next high is usually lower than the first high. So this is the second formation of the M pattern. And then the last formation is when we have the first high lower than what's the second top. So these are like the three formations of the M pattern. So the first one has pure double top. The second one has the first top higher than the second one. And the third one has the first top lower than the second one. So the next question would now be, how do we trade these patterns? Now we're going to be looking at it like this, and then we'll go to the chart and look at examples. So like I always try to do, this video would not be so long, but the information would be clear. So let's look at, now we've looked at the types of M pattern. The first has double top, where both price levels are the same. The second has the price level where one of the top is high, the first top is higher than the second, where then the third has the first top lower than the second top. So the next question would now be, how do we trade M patterns? So how do we trade M patterns? Now, it's very simple when trading M patterns. We said that there are bearish reversal patterns. So if I were to trade, when you come across M patterns, just as I've explained before for double top, all you have to do is to wait for the neckline, because the parts of the M pattern, this spot here is what we refer to as what? The neckline. And just as I've explained severally before now in my other videos, so once an M pattern is formed or spotted, all you need to do is to wait for price to get back to this neckline. So once price gets back to this neckline and you notice a change of character or certain candlesticks, then you take your sell trade. Now, I'll have to also make us understand that there are instances where price doesn't just stop at this neckline. Price can move upward a bit, come into the space between the neckline and the top of the M pattern, play within this place, so long as price doesn't take out this part of the M pattern and close above it, then the pattern is still very, very valid. So when price can come here to form a triple top, price can change character within this place and then drop downwards. So to trade the M pattern, we wait for the formation of the M, then we wait for retracement of price to the neckline or within this space, observe a change of character, and then take our sell trade. Now, what I've explained now for this particular type of M pattern applies to these other variations of M pattern. So now that we've seen the theoretical aspect of it, let's now go to the charts to see the practical aspect. So because we've just stated that M patterns are mainly prevalent in the bearish markets or downward moving markets, let's go to the line charts. We'll be looking at these markets. Let me move this, and this. So let's take our time to look at this portion of the chart. So we'll go to the line graph, or it's not needed. So from our line graph, if I'm to zoom it out, we can see that in this downward trend, there are lots of M printed, but how do we trade them? Now, we can see that at the very beginning, this was a bullish trend. Market was printing higher highs and higher lows. Now, immediately the market got to the point of reversal, we saw it made was an M pattern. So once this M pattern was formed, if we were to trade it just like I stated, all I would need to do would be was to come to this neckline and wait to see what happens. So if we go back to the candlestick chart, you can see that price got into this place and dropped down. So let's look at another variation of the M pattern. Now, this luckily prints for us the very first variation where we have was the double top. Now, another one would be the very next pattern, which is this. Now, we can see that this is another variation of the M pattern where the initial top is what is higher than the second top. So we can see that this is what we have. They are so similar. So we'll go to the line chart again, do an adjustment and see that immediately price got in here. price went down. Now you might be looking at the movement as not being so much, but trust me, this is H4 time frame. So if you go to the lower time frame, you see that the move wasn't small. So you can see that the move was small. So let's go back to the H4 time frame and continue. So let's see if we can get another variation. Now this is another variation of the M pattern, where also the first top was higher than the second, but all the same, it gave us what? An M pattern. And if we go to the candlestick chart, you can see that price came in here, pulled down, and we can even see that price tried to come to this point, just like I stated here. Instead of just hitting the neckline and going down, price got in here. But so long as price doesn't take out the stop, then the pattern is still very, very valid. So price got to this point, and then we can see that there was a drop. We go back to the line graph, and then we can see another one here. So M pattern here, price got in here and pulled back. So we see here also that even though price came up here, it did not close above the stop, and as a result, it remained valid. So you can see that we can go on and on and on and on and on. The M pattern is a very, very profitable pattern. So if we are to take this, so can extend this here. So let's take this and even see how we would have entered this trade or to sell this particular trade, because we said it's a bearish reversal pattern. So this is H4. If having spotted the M pattern here, I go to H1. Now I can see that the price has nicely gotten into this neckline area that I've mapped out. Then the next thing will be to go to the M30. And let's look for the zone that we've mapped out. Let's go back to H4. H4 to H1. Okay. Then M30. Beautiful. Now we can see. You can see that even in, so all we would have needed to do here would be to impute a trend line can see this is beautiful. So once you impute a trend line and the trend line gets broken and retested, then your stop loss would be way here. Can give it a little breathing space above this high. So even when, if you were to enter this trade here, even when it's pulled back up, then your stop loss would still be safe. You could be in a negative for a while, but just look at the profits. You can see the market was dropping down. So the M pattern is a very, very profitable pattern. So just like I've said, the M pattern is a bearish reversal pattern. It has 3 different variations. The one with the double top, another with the first top higher than the second top, the third with the first top lower than the second top. And I said to trade this pattern, all you have to do is to map out the neckline, wait for price to retrace back into the neckline, and wait for a change of character or change of trend, then take your sell trades. Now, just to leave us with a bonus for those of us that will be coming in contact with this particular video, immediately it drops. There is currently a valid market here with an M pattern formed already, and The market is currently trying to go back to retest the neckline. Now you see this beautiful formation. This is an M pattern. So this is already presenting us with what? A market opportunity to practice what I have just taught. So once you can already see that the price is retracing. So once the price gets back into this zone, all we need to do will be to scale to the lower time frame and look and take what our entry. So like I've stated severally, your entries in the lower time frame could be as a result of a candlestick pattern, it could be as a result of a chart pattern, and then you take your sell trade. So I'd like to get feedbacks from those of us who would be opportune to come across this video to see how this particular trade played out. I'll be very, very interested. This is a very, very good setup that I believe will make us a lot of money, because even as we can see, though the market was going up, the trend line had just been broken and retested, M pattern had been formed. So I'll be looking out for this trade and taking this trade. You can even impute a trend line here, also a counter trend line, and wait for the touch of this trend line, then take your what? Your sell trade. So that's that for how to trade the M structural pattern. Now, like I always say, if you want to learn a lot of this stuff, or how to analyze trades, how to do good top-down analysis, as you would have seen from my previous video, I'm open for mentorship and training. So you can always reach out to the WhatsApp line on my bio below. So just before I go, if you know this video has been of any help to you, if you've gotten any form of information, please like, share, and subscribe, as I'll be dropping more to help our trading journey. Thank you for your time. Cheers.